welcome to Martin Reynolds. Thank you for joining us, Martin. Let's get stuck into all things mortgages. What are the big challenges out in the mortgage market at the moment?
Okay, well, morning, Dan, and morning, everyone who's listening. The market is in flux, shall we say, at the moment, and not working as we would normally expect it. We're seeing base rate rise for the first time in a long time, consistently. Swap rates are very volatile in the market, whereas normally you may expect a swap rate at 2 or 5 year fixed to maybe move 1 or 2 basis points a day. If you're lucky, some of the days they've been moving 15, 20, 25 basis points up and then 10 down the next day, which is causing challenges, I think, for lenders on funding the products at the right rate, etc. And we know all the economic issues that are causing that, the war in Ukraine, etc. But I think what it is doing, though, is it's meaning that lenders are having to reprice up very quickly, which is causing headaches. Sometimes only with half a day's notice. That is meaning that obviously members are having to talk to customers, having to rearrange their days. In a lot of instances, if 2 or 3 lenders pull rates on the same day, expecting the submission that date, it's the night out that was planned might not be happening in a lot of instances, and I think that's causing quite a bit of stress. It's causing then pile-ups at the lenders because they're getting a big influx on the day that they're pulling, and what we're seeing is that's causing service issues, which is then meaning that they reprice up again to try and satisfy their service issues, to try and manage that. But then everybody just keeps doing that, and it just becomes a self-fulfilling prophecy that everybody's just getting overwhelmed, and that's causing issues. And because base rate is rising as well, customers are starting to want to do something. They are wanting to remortgage. They are wanting to grab those rates quick, which is just creating a market that it is just moving at fast speed, and then that's causing service issues all the way through the chain. Then we are now seeing that to buy a property is taking anything up to 4 months from the date, 4 to 5 months from the date of actual and offer accepted to completing on that loan. That used to be 12 weeks. So we're now up to maybe 20 weeks, which is causing that. And that's everything along the chain: solicitors, conveyancers, customers getting everything through, lenders underwriting. All of those things are causing challenges. You add in then that the different requirements of customers that have happened post-COVID. A lot of people have moved out into the country. Most people have had tweaks to their job roles, their cost incomes, etc. So all of those things are coming in. The cost of living is dropping in, which is making affordability potentially a little bit more tricky moving forward. You add all of those put in, and I suppose the one positive, if you want to take from it, is advice has never been more important. Yeah. However, you talk to a lot of advisors and they're all probably going to have another record year, but it's probably going to be the hardest they work for it, because every case is a challenge for one reason or another, and they're not coming through as quick. And if they're not completing as quick, then obviously payment of procuration fees isn't coming through as quick.
And is there light at the end of the tunnel for this, or is this systemic and going to continue this knock-on effect?
I think we need swap rates to settle down. I think swap rates have already factored in base rate at around 3% in the next couple of years. So whether we actually get that high, the Bank of England are sort of predicting probably they won't need to go that high. The Fed in America has gone very hard, but the Bank of England seems to be taking it easy as it goes. So I think we need that volatility in the swap rates to calm down so that lenders don't feel they have to continually change the rates because of that. That will then take away the urgency of people thinking they need to grab a rate. And I think it's that urgency on top of the service issues that's causing that roll-on effect.
There's still a lot of coverage in the press and across the industry about green mortgages, and what's the current state of play? What's being expected of lenders and advisors?
Well, the government have set out targets of what they expect lenders to do with their housing stock. They're trying to, it's not formal yet, so we're still waiting for the final rules, but they're implying all properties on a DPC need to be C and above. So that's a big challenge across the market to get in housing to that area. I think when you look at, I think it's approximately about 23% of the emissions that the UK gives out is relating to housing. So, there is a big area there that if we can actually help make homes more efficient, and that's good. I think the challenge we've got at the moment is the product set that the lenders have got isn't really there yet. At the moment, they're maybe offering 5 basis point discount off their normal rates if your EPC is a C or above. That's not really helping the market, because you're sort of, somebody's buying a house and they're getting the benefit of a lower rate because somebody else has already got that house to a C, so they're not really doing anything to gain that benefit. So I think what we need to do is sort of get products that help incentivize people to do things to their house to actually move that rating up, and get that information out. So as a business, we've along with 2 other distributors initially, we've come together, and it's sort of, this is a big issue, so it's a sort of club versus country issue of we need to get everything there. So we've created the Mortgage Climate Action Group, and we've been talking to the top 15 lenders about what we can do to get the education out to the members, to get the education out to consumers, and also upwards to the regulator and the government of what we can do. We've opened that out to other distributors, and we're just about to launch a website. So we're trying to bring all that information about that into one place, so as an industry we can work together to actually help get enough information to the members out so that they can talk about it confidently, but then also for them to be able to signpost out to the consumer once we start getting the right products, what they can do to their houses to actually help make them more environmentally friendly.
And buy-to-let's the main focus to start with on this, isn't it?
Yeah, we're waiting for the final rules from the government. So the rumour was that it was going to be by 2024, or rented properties had to be a C or above. We haven't had that finalised, but I think that shouldn't stop members talking to their clients about it, getting their landlords prepped for it. I wouldn't necessarily tell them to actually go out and start retrofitting those properties yet, because we probably assume that the government might offer some subsidies somewhere along the line, and what we won't want to do is give the advice, get them to do it now, and then in 6 months' time the subsidies that aren't backdated that they could have got. So I think start warming up the landlords that this is coming. We're waiting for the final rules, and just get ready to take action. So that's one of the reasons why we set up on the website our Buy to Let Plus section. So that's starting to give all that information of what's happening in the buy to let market, whether it's regulatory criteria, etc. And that'll be a great point for people to look at.
And so to finish us off, what's the big opportunities out there? Give us the positive news.
Oh, the positive news for me is because of all these things happening, advice has got to be the best thing going. Consumers will not know where to turn, what to do, and how to do it. So I think, as Richard Merritt, who's our head of business, he talks about become customer obsessed. Making sure that you are having those check-ins to understand what they are and what they're doing and where they're going, so that you can actually understand their needs and help them more. Product transfers and remortgages, there's some big cessations coming towards the end of the year. So, get those there, making sure it is that contact with the customer, making sure you understand what your product range is, and understand, is there any gaps in that product range that you offer that you could help your clients with, and actually work with them, get that information, talk to us, we can help you. And basically just make sure that, as we say, you become customer obsessed.
Martin, thank you very much. A pleasure as always. Speak to you soon.
Thank you.